Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe. Really excited for today's show. We've got somebody that I've been following for a long time and finally got him on the podcast. Well, finally asked him to come on the podcast. I'm sure he would have come earlier, but introducing Reid Bennett. So Reid, how's it going today?
Going fantastic. Thanks for having me on, Brian. I really appreciate the opportunity.
Absolutely. And by the way, I love the content you throw out on LinkedIn. You're one person that I love following. And just for people out there, if you're not following him right now, go into LinkedIn. We'll have a link in the show notes to his profile, but give him a follow. That said, Reid, tell us a little bit about yourself and kind of how you got into the multifamily industry.
Sure. I started in the multifamily industry based in Chicago. I was in the Chicago neighborhoods. 2001 is when I got my real estate license, and I've been selling multifamily assets the entire time. I never switched. I always say that I'm not smart enough to figure out the other asset classes. So I've stayed in my lane. Even within that niche, we've kind of broken it up to market rate and affordable housing deals, both low-income housing tax credits and project-based Section 8 HAP contracts as well.
Okay.
So I've been doing that since 2001, took over the National Council Chair for Multifamily SVN in 2013. So I've been in that role for a little bit of time as well. And that role has kind of opened up the entire country to me. So I work within my council with a number of agents across the country selling deals from El Paso, Texas to Syracuse, New York to Raleigh, Durham.
So what exactly is that council? And so I know it is a national council, but what's the purpose of the council? And in addition to your brokerage duties?
Yes. So that's something that I took on, so what we have about 225 plus offices around the country. And a lot of the offices that we have are sitting in secondary and tertiary markets. And oftentimes there are advisors that might be jack of all trades in their market because it might be a smaller market. So they have to do all the food groups, office, industrial, retail, leasing, multifamily. We created this council with all the different food groups. So there's a national council chair of office, retail, industrial. And what we do there is just, we share best practices. I used to do a monthly call, which was a lot to put on. Now we do quarterly calls where I go on, I share updates as to what's happening across the country in the multifamily space. We usually have a guest speaker come on and talk about some form that's going to help a lot of the owners and operators of multifamily across the country. And then we share deals. I've closed deals in 9 different states just because of this council, and we've been able to collaborate. We just closed a 116 unit deal in Alabama. We have another 280 units. We closed 825 unit portfolio in Syracuse, a 200 unit deal in El Paso, all from the council and collaborating with each other to provide the client the best service.
Awesome. Yeah. All right. So back to your story now that we kind of dissected that a little bit. So yeah, please pick up where I interrupted you.
I think it was basically when I took over the product council chair position there. It's just really, in essence, it's allowed me to be licensed in every state. Real estate is both national and local. You have to understand the local nuances that are going on, down to the street level. You can be on one side of the street in a certain market that's much better than the other side of the street, as I'm sure you're aware. To have that local knowledge and a local partnership, and then teaming up with our team here in Chicago that, we put the packages together, we underwrite it. Oftentimes we're going to bring the buyer to the deal. It's just allowed us to really open our markets up. And then it also has allowed us to bring our clients from the Midwest into other markets pretty easily. Here in the Midwest, they have summer homes or winter homes actually in Scottsdale, Arizona, or Naples, Florida, or something like that, where even though they're down there half the time, they're still deal junkies and want to find deals down there. So we've been able to partner up with different groups in those markets. But
always nice to make your summer home a tax. Not the home, but the trip to your summer home a tax.
100%. 100%.
Yeah, I haven't done anything like that yet, but we were taking the kids to Orlando every year for like the Disney and the Universal Studios. And that's where my mind immediately went to. It's like, we might as well just buy an Airbnb here. And then
why not?
2022 happened, and that's why not actually.
Right. Well, there's always things that happen to the best laid plans.
Yeah.
So talking offline.
Yeah, interest rates skyrocketed and all of a sudden the numbers didn't work anymore. And it's like, all right, we'll put that on hold for a year or two. Yep. But anyway, yeah. So you've got your Midwest buyers, you're licensed everywhere. You're able to to bring buyers to different states, different deals. I love that aspect of it. Something I'd love to get into. And actually, before I do this, one thing, is there more to the story that you need to go through before I start asking other questions?
No, let's go into the questions. Let's get into it.
All right. So, question number one, I mean, from a broker's perspective, I mean, one of these things that I get asked a lot, and I actually, had somebody on LinkedIn just sent a similar question. Speaking with brokers, new person trying to get traction with brokers, what would be the best way for somebody who is newer, not a lot of experience, not a track record to speak of, to get in with brokers and actually get their attention?
It's a great question. I mean, I think there are a number of ways to do that. The first is to just be in constant contact with that broker. Make it easy for that broker to understand who you are. Maybe even the easiest, depending on if you're trying to break in, let's say you're trying to break into 100+ units with a certain broker that's in that market. Because as we were talking about before, I would say brokers control at least 75% of the deal volume in any given market around the country. So, while you could be trying to talk directly to owners, which a lot do, you might be spinning your wheels to a certain extent, spending a lot of time doing that. So if you have the avenues to the brokers, even if, it's not a listed deal, oftentimes brokers are the ones that hear from the owner that's saying, look, I'm not going to list my deal. I don't want my staff to know I'm even selling it or considering selling it. But if you have somebody, I'm always looking at offers. So we're going to go to the person that we think we can make that deal with seamlessly and have a surety of close.
Yep.
So I would treat the brokerage community in the areas that you are interested in investing exactly the same way that we as brokers treat our farm area when we're talking to owners and prospecting the owners. You should be prospecting the brokers, talking to them, asking them questions, sharing things about what you're doing. If you have recent successes in any other market, share that with the brokers and say, look, I'm trying to bring this, to your market. Or another way would be to partner with somebody, whether it be, somebody that has a track record, that has a substantial, balance sheet that's in that market or in a neighboring market, saying this is my partner that I'm teaming up with on deals. Oftentimes that might be a management partner. We found that management is one of the toughest things to wrap your head around with an apartment complex. They're very management intensive, as you know.
They are. Yep.
So if you can align yourself with a strong management team, and what some of the best partnerships I've seen is where the management entity was vested in the deal, because management can make or break any multifamily deal. And if you just have a third-party manager that all they're getting is their 5% or 4% or whatever it is off the top, they're not going to be the ones that are really making sure that property is humming. If you have a management entity partner that brought 30% of the skin into the game and treats it like it's their own, it's going to be a whole different level of management on that property.
Yeah. So going back to kind of recap, partner with somebody with experience is what I heard, and somebody who can manage, which, I mean, you're spot on. The management is much more difficult than I think many people realize. And the other part was just be consistent with your reach out, so
Yes.
be the person who's always reaching out. Now, you mentioned, 75%, and, I'm a fan of the saying that like 80% of all statistics are completely made up, and I made up that 80% number. So when you look at that 75% of the properties that are brokered, where do you see most of the properties that don't go through brokers? Is there a certain size, a certain asset class, a certain, what's the typical unbrokered property look like, if there is one?
I think that would vary across the board. I think anything under, the smaller properties under 12 units might get thrown onto the MLS systems around the country.
Yep.
Anything under about 150 units, depending on what market you're in, is where we see, 150 units is where you have the scale enough to have an on-site property manager and an on-site maintenance staff, right? Once you're in that 50 to 100, depending again on where you are and what the income is of those properties, that's where it's very difficult. And those are the mom and pop type owners.
Yeah.
that might be running those deals.
Yeah.
So sometimes we see those where, you know, they might trade with people that they know direct, or they might not understand the value that a broadly marketing your deal might bring to you. I've had mom and pop owners that have called me up and they've asked me, I mean, there was one recently in a market that we've sold 27 apartment buildings and complexes in. And I'm always sending value out to them. And actually, this gentleman happened to be a property insurance agent, and I've given him business. And, you know, he called me up and he was asking me very specific questions about a transaction. And I said, do you have your property under contract? Because I had already valued his property for him, set it all up. And he's like, yeah, I do. You know, it's direct. So I'm avoiding a brokerage fee. Well, he avoided about $100,000 fee. He might have paid, but I think he sold his deal for about 1.3 million below what we could have gotten. So
yeah. I'm smiling real big right now because we have a property under contract that was listed on the MLS, you know. So I'm active in Salt Lake City, just to give you a point of reference. But we're chasing like a 50-something unit property, you know, $13 million purchase price. And this one popped up a couple of blocks away, and 24 units with a residential real estate broker.
Love it.
And just to throw some numbers out there, these are comps. You know, they're the same vintage, they're the same size. I mean, they are comps. We're buying one at $225 a door. We're buying the other at $187 a door. You know, and so when you start looking at that, I think this owner left about $1 million on the table by not using a commercial real estate broker. But
in their mind, they're saving a 5% brokerage commission.
Right. Exactly. So anyway, it is one of those things. I mean, the original question, just kind of wrapping this section up, original question was like, what transactions are typically not brokered? And it seems like it's the less sophisticated sellers
I think it would be that. I think it'd be less sophisticated sellers that think that it's both sides, because my favorite sellers are the ones that have law degrees that think they're smarter than everybody. You know, that's another great seller that doesn't want to hire somebody. So not to pick on anybody that's an attorney that's also an owner, but oftentimes it's somebody that thinks they're the smartest one in the room and can do it on their own, or somebody that doesn't understand the value that a broker in the market can bring to the table. And also within that, you also have owners that will give any broker that calls them their data and say, yeah, I'm not going to list it, but go ahead and, you know, send it to your buyers.
Yeah.
That's worse.
I hate that.
That's worse.
Gosh. Yeah.
Because what that does, if you are anywhere near a motivated or serious seller and that happens, you know, because I'll never forget, somebody posted on LinkedIn, I just got this off-market deal from the 7th broker today. So what that does, when you as a buyer start getting, I mean, you probably know this, when you see 7 brokers bring you the same deal, you're like, I'm not even getting involved in this deal.
Yeah. Because I mean, likely if you're a legit buyer, you have relationships with all 7 of those brokers.
Correct.
And now it's just like, oh my goodness, which one do I put the offer in through?
Well,
you know, and
most of the time you're going to say, forget it, I'm not even getting involved in this. And so you as a seller, or you're going to try to figure out which one might have the relationship, but we're
actually in that situation right now in a property, you know, where it was brought to us by one broker. We looked at it, we liked the numbers, we churned really quick, we put an offer in, and then we found out from 2 other brokers that they were also soliciting offers on that property. And that, I mean, we'd already put the offer in, so we'd already chosen it. But at the same time, you know, exactly what you're saying is true, is it's almost a no-win situation for me as a buyer, because, you know, now I risk pissing off one of the brokers that's bringing me deals. But anyway, that's my perspective.
I wouldn't even worry about that risk, because, you know, you can always say, you know what, Joe, I already got this from, you know, another broker, and we're already kind of down the road. They can't fault you for that. The problem you'll find out in those kind of situations is who's paying the fee, because
Oh, yeah.
because some of the brokers might have a fee agreement with the seller.
Hmm.
Many brokers are going to be asking you to pay the fee,
Hmm.
because in many of those cases, well, first of all, in any commercial real estate case, any broker in the world can get a deal down to the commission apart. It's very easy. No matter whether it's a $30 million deal or a $3 million deal, you can always negotiate the deal down to your commission.
Yeah.
And so that becomes, when you have 4 different brokers or 5 different brokers working on this deal, trying to all bring off-market buyers, now you have a seller that's going to be countering these things separately and independently of one another. It's a
It's a
total
mess. Yeah.
shit.
Your point just reminded me, one of the transactions, I'm digging back 5 or 6 years ago, but we had one transaction where we fell in the case where the broker did not have a contract with the buyer, or a listing agreement, whatever it's called, with the buyer. And after we got the deal under contract, the broker started asking us to pay the commission, and it was just like, oh, we did, I mean, and we negotiated it down, because it was just like, hey, look, I mean, I'm sorry you didn't have a contract with the buyer, but they did broker the deal. So, anyway, the buyer, or the seller, we were the buyer. Sorry, I'm getting my terms
Right. No,
confused.
I
The seller
understand.
dug his heels in and just said, we never had an agreement. Thanks for helping me. But yeah, that does happen as well. All right. Well, hey, so thanks for the tips on that one. I think the lots of good information there. One thing I wanted to move on and talk about is, something you post about a lot is kind of like where the market's headed now. What's obviously, today, well, it's not obvious to the listeners, but we're a day after the Fed came out and said they're maintaining course, not lowering rates. And for anybody who's carrying, today's June 13th when we're recording this, but where do you think the market is headed, number one? And number two, what's the best way to get out in front of what could be potentially coming down the pipes?
Every prognosticator in the world right now is trying to figure out whether the Fed is going to drop rates. Last year, everybody was betting their house on the fact that this being an election year, maybe you've heard about that, might, if you're right, typically, historically speaking, in election years, there's always a big interest rate drop right before the elections, that the current incumbent president, typically has that as a political ploy to get, votes towards the end of the year. Everybody and their grandmother thought there were going to be 4 interest rate cuts in 2024. This is back, maybe October of last year, and everybody's banking on it. And all the sellers that we're talking to were banking on that. We're going to hold off putting our deal in the market until we have favorable interest rate cuts. I didn't have any confidence that that was going to happen. And it didn't happen yesterday, as I don't think anybody's surprised about that. This cycle is very different than the 2008, 9, 10 cycle that we went through. But the metrics are very robust with multifamily. But I wouldn't bank on any cuts this year. And if there is going to be one, maybe it'll be 25 basis points in September, or something like that. But it's going to have a nominal impact on any kind of values moving forward. What I would be more concerned about are the billions and billions of dollars in the multifamily space that are the loans that are coming due in 2025 and trickling through the end of this year. Everybody was also, for 2023 and in the early part of 24, everybody's waiting for, there's going to be this floodgate opening of distress coming in the multifamily space. It's not happening. It's not even a river, and it's not even a trickle. I mean, there might be a few things here or there. I mean, we're doing, BOVs for different lenders. Fannie and Freddie are asking us to take a look at deals to, determine whether or not they should release the next part of the renovation budget for some of these multifamily value add groups. But the fact of the matter is, what's happening in the markets with the interest rates is the same thing that's happening with the residential interest rates, which is forcing a lot of the tenants to remain renters in apartment buildings, which is creating a better, more robust situation for the multifamily metrics from a rental standpoint. The problem, and this is a long-winded answer to your question about interest rates, but so the problem that we're seeing is, even if you're able to get double-digit percentage increases in your rents over the last couple of years, and even if you get another 5, 6, 7% increase this year, there are 2 big ticket line items on the expense side, insurance premiums and
Yep.
real estate taxes that are wiping years of rental increases.
Yeah.
So you couple that with the fact that it's triple the cost of capital to, finance a deal. And so now you have all these loans that are going to be coming due the rest of this year and into 2025 that are going to
Yeah.
have potentially worse NOIs with
Mhm.
higher borrowing costs.
Yeah.
So,
And I mean, and the worst NOIs, once again, you're pointing at the two items, it's expense items. It's
correct.
property taxes and it's insurance. And I mean, I operate in a city where insurance is not sky high, but it is still tripled in the last several years. I mean, we're now at like 700 a door.
When you were
Unlike
400, right?
Yeah, we were. I mean,
Maybe
couple
300.
of years ago, like 250 a door
Yeah.
is what it was.
So
But
that seems sky high to me. You said that's not sky high. That would seem sky high to me.
it does seem sky high. But I'm an LP on a property in Houston that's at
Oh,
1,400 a door.
yeah.
And that is, I'm thanking my lucky stars that Utah's only at 700 a door.
Yeah.
Because of what you're seeing in Texas and what you're seeing in Florida and some of the any of those coastal states that have lots of hurricanes and such. But
Yep.
all right, so kind of summing things up, interest rate cuts might happen, and don't bank on it. But
Yeah.
so now with property taxes, I mean that's obviously kind of a state to state, county to county thing. Where has that been the worst in the nation recently?
Well, I think where it's the worst is in the municipalities where it's coming in a triennial.
Mhm.
Here in the Midwest, especially in Chicago, we're on a triennial.
Mhm.
And I was just on a panel last week where I was moderating it, and one of the gentlemen on the panel was a real
Mhm.
estate tax attorney. And what he was stating was here in many of the Chicago markets, which is Cook County, you're on a triennial, so now they're going back and they're finally assessing based on
Mhm.
the
Yes.
ridiculousness of 2021 and 2022 pricing, which he's
Mhm.
saying if somebody just bought a deal for $15 million
Mhm.
and we're now going to assess them based on the fact that it is $15 million, and he's saying, no, it's only worth 8.
Mhm.
Why? You
Yeah.
just got an appraisal and it's 15 million. You just paid 15 million.
Mhm.
So now a lot of that is catching up right now, which is, to the detriment of a lot of
Yeah.
owners and operators right now that are trying to fight this.
Yeah. Yeah, interesting. Yeah, I mean, I owned real estate in California before. I know that they're one state where every time you sell a property, the property tax is reset. It's same in South Carolina. I've owned properties there as well. Same in South Carolina.
They set upon
Whatever
sale.
whatever the purchase price is the new tax assessed. But yeah, I know some of the cities and areas that are kind of the non-disclosure states. Some of those states, I know Houston's also been one of the areas where taxes have gone up a lot. So
Yep.
anyway, cool. So I mean, looking forward, if you had to give advice to somebody who's just starting, and this is across the board, wherever you want to pick it, you had to give advice to somebody who's starting right now, wants to make a career out of multifamily investing, what would your advice be?
My advice would be to learn a particular market first and
Okay.
then go out from there. So start with maybe your own backyard, understand your particular market. And frankly, if you're going down to straight up starting out, what should I buy?
Mhm.
I'm buying a 4-unit apartment building. If I'm, especially if I'm a younger single person, I'm
Mhm.
buying a 4-unit apartment building. I'm living in the basement unit
Mhm.
because you can get a residential loan for a
Yeah.
4-unit apartment building with 3 to 5% down.
Mhm.
You can live in that unit. The rest of the tenants are going to be paying your mortgage. They're going to be paying all of your expenses. You can write every single thing off that you do to go into that building. You put a TV in your own unit, technically it's going into your building, then you're having them pay down your mortgage. Eventually you'll have equity in that building that a lot of people that I know that have done that particular situation, they get that favorable loan. They live in that
Mhm.
apartment building in one of those units. They eventually get to a point where they're just going to rent that unit out themselves, maybe take the equity and go buy another deal, and then eventually have a portfolio of these types of deals as well. There's that way of going about it. There's another way of kind of being a bird dog,
Mhm.
and looking
Yeah.
at the deals and really almost acting as a broker where you're talking to these owners and trying to find a deal. Because the way that I've always looked at this deal, at the real estate game is, if you find the deal, money's easy, right? I
Mhm.
mean, it's all about the product, and it's all about finding that particular deal in that situation and understanding the market, understanding why this is a good deal.
Mhm.
And typically, if you know the market and know that we've found deals that have been owned for more than 40 years by the same owner, and
Mhm.
$300 a unit under market without
Wow.
doing anything. So we've brought those deals to market where a lot of the buyers are like, yeah, but this is like a 3 cap. And
I would love that.
I'm
Yeah.
saying, yeah, sure, it's a 3 cap on a T12, but this gentleman is running 140 month-to-month leases at $300 a month below what the market is.
You flip a switch and it goes from a 3 cap to like a 6 cap on the T12. Yeah.
Or even better. I mean, if you
Yeah.
could, so we actually sold a deal like that. It was
Mhm.
142 units. It was 142 month-to-month leases that were
Wow.
$200 to $300 below market.
Mhm.
What the buyer ended up doing was saying, okay, he went in day one, said to all 142 tenants, you can stay month to month.
Mhm.
No problem. If you stay month to month, I'm raising you $300 a month.
Yep.
Or you can execute a lease and I'm only going to raise you 100. You got 118 to sign that month, got the rest of them to sign the next month, and then raised everybody 10% the following year.
Yeah.
And then that thing went from a $5 million to a $15 million apartment building like that.
That quick. What I've found, and I've purchased a couple of small properties. I have not found like 100 and something unit property like this yet. I would love to get my hands on one of these. I think a lot of owners look at that situation and they're worried about raising rents and having a mass exodus. What I've found time and time again is if their current rent is 300 below market, I mean, you can almost bring them up to market and they're not going to be able to find anywhere else cheaper.
Exactly. But
So
that comes from knowing
yeah.
the market. And we track every deal 50 units and above with 5 different systems. And I've offered this to anybody looking into it that owns any one of my clients, anybody on this call. If you're looking at a particular market
Mhm.
and it's a deal that's 50 or above, reach out to me. I'm happy to share information, because we have a couple systems, and one of them will take every one of the unit mixes, your 1 bedrooms, 2 bedrooms, 3 bedrooms, and it will show you exactly where you're sitting on a per unit, per square foot
Mhm.
basis as it relates to your competitive set around you.
Nice.
So you can go in, and if you look at a couple of these systems and you're looking, and it'll break it down per square foot. If I'm like 53 cents a foot
Yeah.
below everybody else, all the comps, I mean, the same vintage, same,
Mhm.
rehab, same. If you are looking at that, then you're saying, look, I don't care if they're month to month, because a lot of the lenders
Yeah.
also, unfortunately, depending on what lender you go with, they're
You
going
can
to
get
look at a month to
skittish.
month. Yeah, they're going to look
Yeah.
to that as a vacant unit, which is
Mhm.
ridiculous,
Yeah.
because I'd rather be buying a deal that's, to me, leases only benefit the tenant. They don't benefit the landlord in
Mhm.
multifamily.
Yeah.
Right. So unless you're all at market or above market rents, then it'll benefit the landlord. But knowing that, and knowing, look, if I go in and somebody is not going to spend $1,000 to move all of their stuff to
Right.
another place that is going to be the same exact rent,
Mhm.
they'd rather pay the $100 a month more to stay.
Yeah. Absolutely true. The very first property I bought, gosh, this is 2019. I mean, I've got a decent amount, nothing compared to you, but I remember there was one tenant that was paying $300 a month in rent, and the market average for that unit type was about 900. And this is the story. This is the story our property manager told us.
Yeah.
I told the property manager, like, hey, what do you want us to do with him? I'm like, where do you think, what's a rent price slightly below market that we can probably get him at where he's not going to have other. So I think we came to him with like maybe $50 to $75 under market. All right. And so he was served, I guess. We gave him the new, here's your new rent price. Property manager said he came in, he was cussing and swearing and yelling and blah, 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 and no way am I signing this. And so that's what the property manager told us. I'm like, well, okay, well, we'll get somebody who will pay that amount. 2 days later, the property manager called me up laughing and said, hey, remember that guy in unit number 201? I'm like, yep. He came in today and signed a lease. Apologized for his reaction. And he said, I searched far and wide. I couldn't find anything anywhere close to here where I'm getting a better price than you're offering me, and I don't want to move. So,
Absolutely.
yeah, so that was, that was my first taste of that. And since then I kind of realized that, yeah, I love the month-to-month rents. I love and incidentally, that non-brokered property that we were talking about, we were looking at those numbers yesterday. Average rent there's a $1.60 a square foot, and the average market rent's at $2. So we got plenty of room to move the needle there too.
That's
anyway,
beautiful. But that gets back
yeah.
to, the two different ways that you can get into the game. To me, I'd rather get into the game with the larger deals and take small pieces of larger deals.
Yeah.
Because there's a lot more opportunity, especially if you find those deals. And that's why you have to have an encyclopedic knowledge of a particular market to know those deals right away. Because again, if you can figure out how to tie those deals up and then bring in an actual partner that can bring the money, and you say, look, give me 25% of this deal, you come in with the money, you're going to be fine. And then from there you can build up wealth pretty quickly, rather than fourplex after fourplex after fourplex, even though neither one are better or worse depending on where you're located. But
no. Yeah, I mean, and with this 24 unit, we were sitting down with one of the brokers from CBRE, and he was asking questions, and as soon as we told, I mean, he knows the market extremely well. Most brokers know markets extremely well, but as soon as we told him where it was and what the purchase price was, his eyes got big, and he was just like, "Oh my goodness!" He's like, "If I would have seen that one, I would have bought it myself."
Right.
But yeah, it comes down to exactly what you say. And I love the advice you gave. You get to know your market well. The better you know your market, the better you're going to understand what a good deal is when you see it.
Absolutely.
And I think one common mistake I see from newer people, and I'm on the fringes of a lot of coaching programs. One common mistake I see of a lot of people is they're all over the place. What markets are you investing in? Texas and Florida. Those are states. What markets are you investing in? Texas and Florida. But
I mean, because real estate, it's full of the shiny object syndrome, right? There's a new flavor every cycle, and if you can just stay focused and just stay, you'll be fine.
Yeah,
stay in your lane.
Well, I'm looking at the time, and man, we've already been talking for a good 45 minutes, so probably time to start wrapping it up. So, last question for you is how can listeners learn more about you?
Well, connect with me on LinkedIn. I think that's where we connected initially.
Yep.
LinkedIn is a fantastic way. You can find me there, or you can give me a call on my cell number, and I can share that with you.
Awesome. So, yeah, if you want to share it, we can put it in the show notes if, however you want to do that.
Perfect. It's 773-251-7342.
Awesome.
Throw it in the show notes.
All right, we'll have that in the show notes. And just a reminder, those links and numbers will be in the show notes. So, you don't have to stop and hurry and write things down. Just tap, swipe up, and the information's right there. But Reid, thank you so much for coming on to the podcast today. And I want you to sign off with your LinkedIn sign off. So
Hashtag multifamily readout.
All right. And we got multifamily Reid out. Awesome. Thank you very much.
All right. Thanks, Brian.